Let's continue our discussion of the stay-at-home economy. Hello, I'm Bruce Frazier. Welcome to Power Charting. Today's agenda. I want to take a few minutes and look at the very long-term trend. Then we're going to do some point and figure work specifically oriented towards volume studies. Point and figure charts have unique volume characteristics which are magnificent. Stay-at-home economy. Let's continue our discussion with a look at industry groups and stocks. Each week, members of our Wyckoff community contribute stocks to this communal Wyckoff watch list. This is the public chart list at StockCharts.com. You can go in each week on Friday, Saturday. This list is updated and have a look. Here you can see the RRG chart of these individual stocks all posted, and it's impressive. Notice the movement upward and to the right of the vast majority of the stocks. And this is exactly what we are all looking for in the RRG components. So this is exceptional. Also, Wyckoff market discussion. We just did a free session on this last Wednesday. You can watch it on YouTube. Go to the Wyckoff Trading YouTube channel and have a look and join our group. If you're a Wycoffian, join us each Wednesday afternoon for the next few months. Give us a look, see what we're doing, because we are discussing these current markets, which are tricky as they can be. And so join us and have a look at what we're doing. Business cycle. Let's say that we are in the completion of distribution and seeing markdown. If that's truly the case, then what we have is we have the stocks starting their downward stride, and business conditions are going to follow this. The news of business activity is going to come at a later time. We're going to see the effects of a turn in the economy, a turn in the stock market, and it's going to only become evident in the top line news, business news at a later date, typically think in terms of 6 months later or even longer. So we are in a condition where we may have a downtrend in force. Well, let's look at the long-term trend of the market here. This is classic Wyckoff trendline construction. This is 50 years of data using the New York Stock Exchange composite. The 74 low is during a very steep recession from 72 to 74. The 82 recession was a very steep recession economically. Both of these produce bear markets. The lows can be drawn in a trend line. Wyckoff said, look for adjacent lows early in the uptrend. The stride will be set very early on. So here you can see a demand line is drawn off of these two early lows. Now this is monthly data, so doesn't 74 low and an 82 low seem like they're pretty far apart. Intervening high here in 1980, trend channel is created, and then another higher trend channel is created off the 87 peak. Here's the 87 crash, and see how well this works all the way through here. So looking at this upward stride, you can see that at the 09 lows, there was a penetration of the demand line temporarily. And this was a period where an accumulation cause was built, and the New York comp turned back up into its channel, and the bull market began. This is a 10-year bull market, quite magnificent. And the one thing you'll notice is the slowing stride or the slowing momentum of the upward movement. And this bull market run is not even able to get up to the overbought line. Here, 2000, huge bull market run, very steep advance, goes through the top of the upper channel line. 2003 to 2007, this is another very robust bull run, goes over the top into an overbought condition, builds a distributional top. This is the Great Recession. So now with the current slowing of momentum in 2019, when the market does break, it breaks the demand line deeply, more deeply than the 09 low. And the New York comp is way below the demand line currently. What we would like to see is a cause build of some sort. Doesn't need to take much time, but a cause that can put the New York comp back into the channel, back above the demand line. We're going to watch closely to see, number one, if the New York comp can get back to the demand line underneath, which would classically represent resistance. So whether it can get there, if it does get there, whether or not it demonstrates resistance there, and if it can then get back up into the channel above the demand line. So these are all the tests that we're going to be watching for, and I will be reporting back. You may want to consider keeping this chart yourself. I think it's a unique chart and an important chart for us to keep an eye on. Okay, so here is another demand line drawn on two early lows in 2016, here and here, overbought line here, creates a channel that is extremely useful. We had at the time talked very much about this buying climax. Goes above the top of the channel, overbought condition, fails back down, goes slightly through the demand line. This is weekly data and this is the S&P. Then tests it and has a rally up. The rally does not get to the overbought line. And then this is October, a very sharp failure from October to the end of December, which is a shakeout and completely takes out the upward stride of the demand line. And at that point, and here's a important support line here, it V-bottoms, rallies up, has a two-stage rally all the way up to the demand line from underneath. Keep in mind the comments from the last chart with the New York comp. We're going to watch for a rally up into the demand line. Here's what happened when the S&P went to the underside of its multi-year upward trend demand line, and then January, February has a failure, and the failure is substantial. So this is the March low. A rally follows the March low, and we have a parallel line that we've drawn from the shakeout low. Look where we are. We've rallied right up to it. We've now spent 2 weeks here without making appreciable gains from this area. So the market, at least for the moment, is stalled out. And here we will pay attention to this to see whether or not on a smaller intraday scale, distribution forms. And looking at that, you've seen this chart before. I'm not going to spend any time on it. We had a very high January, February peak, very sharp decline. I think this chart can still be of use to us because we did get a March low. I think this has moved back about a month. And you see here distribution that can form at the secondary test. Now, obviously, this is going to be a much lower low, much lower high than this high back in February, and it's probably going to get pushed back into the month of May. So a decline, a distribution, and then a decline back to the low. If it can hold, we get a decline. We don't know. We get a decline. We make a higher low, maybe a lower low, but into the June-July period, which is the end of the second quarter, we now have potentially a cause build for a rally into the second half of the year. It's a big wish at this point, but we're going to test for that with our analysis. Now, turning to point and figure using volume. Volume is a very cool tool with point and figure, and StockCharts.com allows us to do this. We look for volume off the low. We see it here. These black bars are up volume bars, intraday data, 30-minute, one box reversal ATR scaling. This is the launch of the upward trend. Then we have an important high volume low made here, which tests the low here. This is a reaccumulation structure. Volume then dries up as it tests here, this low and this low, and a catapult wall comes on very high volume, which is effort and ease of movement, cause and effect, or effort and result. So we have high effort, but we have high result. Here we have a result which is diminished from the prior one, and the volume is high, but it's less. So there's effort and less result. And so the stride is slowing, the momentum is slowing. Here is another period of volume coming in and even less result in these two columns here. Now, the volume dries up on a pause, that's bullish. Then there's another thrust upward that is no greater than the prior one. The volume is higher, so very high volume and a diminished thrust, which shows loss of momentum. There is effort without commensurate result. Now, a pullback, which is a very deep pullback, comes on less volume, so lack of supply. Another rally occurs, very high volume compared to the prior columns, and not back to the prior highs yet. So this is showing that there is the evidence of at least distribution on a minor scale. We want to see volume come in on the decline to confirm distribution. Well, let's count this area here and see what it looks like. So this count, 29 columns, gives us a count to 290904, 3,390, which is just the midpoint of this range. So anything over 2909, which is one box above the highest call, or the highest row here, 2893. So we're very close to fulfilling this count. Arguably, we're close enough to say that we have. And with that, we are done with this part. I'm going to pause, and we're going to look at some industry. Starting with some interesting groups, we will then turn to individual stocks, and the groups are going to tend to be groups that we're not going to cover today in the individual stocks. Brewers. So Brewers are fascinating to me. Downward stride since 2016, and then a sharp sell-off into an oversold condition on volume and a rally back up in. We're not out of the channel. We're into the channel. Relative strength is still bouncing along the bottom. So this appears to be a group where we can go in, drill in, and look at the individual names and see what looks best. but the group has early promise, but may need to build a cause. Here is the U.S. food products. This was a very sharp decline, but notice that the relative strength was going up while food products was declining. A subtle clue, very interesting. And a very important rally has followed. We're going to want to look at the individual stocks in this group. This appears to be a relative strength base with a very large base back to 2018, which could be evidence of an important new leadership characteristic for the U.S. food producers. Let me say this also about this indelible trend in the stay-at-home theme. Prior to the COVID-19 pandemic crisis, the mix of food consumption was 60% of food consumption was away from home, 40% was purchased at the grocery store. Now we know that that's shifted, and the big question becomes, what are consumer norms going to be going forward? Are consumers going to continue to consume food at home? Are they going to be willing to go back out into restaurants again as the economy gets open? How long will it take the economy to fully get open again? So we don't know what the new mix is going to be, but it changes everything. It changes transportation trends. It changes production trends. It changes consumption, how food is bought and consumed going forward. And this is something that is probably going to be with us for a significant period of time. We want to confirm these characteristics, these changes in stock activity, in industry group activity. And that is what we're doing here. Moving on, keeping this in mind, we have here U.S. non-durable household products. And the decline in these non-durable household products was shallow, and the relative strength actually rallied on that very shallow decline. Important uptrend preceded it. A good bounce back near the highs followed. Here are some of the big stocks in this industry group. Ecolabs is one that is not in the group, as I recall, which is in other comparable industry groups that we should also be considering and looking at. And so I leave it to you to go look at these names. Soft drinks, big drop in soft drinks, but the relative strength did not decline much, tiny bit. Also, the low was made in the soft drink makers before the low in the market. Interesting. So now, slightly rising upward relative strength trend, good bounce in the group. This would cause me to go drill into the group and look for individual ideas that might be true leadership. Trucking, very intrigued with trucking. So trucking has been in a range-bound state since 2018 after a really good uptrend. So range-bound condition, trading sideways, important decline here into late 2018, springs the low in 2020, has a really good bounce. Look at relative strength. Relative strength is jumping up in a near vertical fashion. It's back up to the long-term moving average, but the long-term trend is rising. If we can get the long-term trend of trucking above its moving average and get them both in gear together, get the trucking index out of the reaccumulation range, this could be a very compelling idea. The whole trucking dynamic, I think, is changing in the economy. And so we're going to look for confirmation of this. This is a very large point figure count also. Okay, not going to spend much time here, just that soybeans are important food commodity. Corn is an important food commodity. We're just going to have a look. Continuous contract back to the middle of 2018. Classic structure, possible accumulation, cyclic accumulation. Phase B, secondary test, comes back, retest the climax lows here and here, big tails. So we'll be watching that. The relative strength for soybeans is acting constructively. Early possible base and uptrend. So I think it's likely that we're going to see rising prices for important food commodities and also for food products. So we need to brace ourselves. Corn, even bigger accumulation type structure, if this is in fact accumulation, but right here, right now, a possible spring. So volume is low and diminishing on the spring. We'll have to wait for the end of the week to know whether the volume is truly low, but we've already have a tail. It's back into the range, and number 3 spring is a low volume spring, and this could result in a rally up towards resistance in short order. So the relative strength is really not telling us much yet, but if we can get a turn back up towards the resistance area and a sharp rally, that would be a classic sign of phase C activity, final testing before a markup. So we'll watch corn. Not that we recommend trading these commodities, but it could tell us an awful lot about pricing power for the whole food complex. We'll go past this one. Amgen, important biotech company. Relative strength trend is dynamic. Up it goes since mid-2019, higher lows, higher highs, making new highs across this whole period back to 2015, which it was just a market performer back here. Now, even though there was an uptrend, now it's pushed back up to the highs, may consolidate here, look for shallow consolidation and continuing relative strength leadership. Very interesting stock, and the whole biotech group is interesting. 2 big accumulation structures in the point figure here and here. So go back and make this chart. It's just a standard traditional chart and count that. PNG Foods, downtrend, a well-defined downtrend back to literally 2016, 2017. Channel oversold here at the end in 2020, but notice that with the oversold condition, that the relative strength actually rose on that, and the low was made in early March ahead of the market. A near vertical rally followed that shakeout low, and now it's trying to get up to the overhanging supply line. So very interesting condition. BMRN, another biotech, huge accumulation structure. Look at the rally that's occurred off of the test of the support area. Relative strength is rising, appears to want to be leadership. If it can get out of this accumulation area, it could be a very dynamic upward stride. Beyond Meat, this has been strong relative strength recently. This is a daily chart, rising dynamically at this point. This is a protein substitute for different meats, and could be a very important food product. Conagra, which is a commodity producer distributor, look at the relative strength, rising, near vertical move off of a higher low here, big base in the relative strength, potentially a big base here. It's trying to get back up to the highs. It's moving easily upward. And so we will keep a really close eye on this one. Campbell Soup. Go to Your 5 program on Monday, and you can see more analysis on Campbell Soup that I did then. Relative strength is rising and now is starting to rise at a faster rate. Accumulation here counts 58.62, no, 64.72. This bigger accumulation counts 100 to 110. And you can see that in your daily 5. Running out of time, I'm going to go as fast as I can. So base in the relative strength, this is fresh still Monte Produce. Very nice base back into 2018. It's trying to turn up. The relative strength is demonstrating that this is resisting going down. And again, early March low ahead of the market. It's acting as though it wants to be a relative strength leader. Flowers Foods, biggest bakery, your daily 5. You can go back and look at point and figure charts on that. And just the first count on Flowers Foods is 58.62, and it's at 22 right now. So has campaign potential. Gilead, very interesting, big accumulation structure, goes all the way back in 2016, 2017, and then a really nice liftoff has occurred in 2020. It's up into resistance and it's consolidating here. A lot of volatility, like to see it get dull and quiet as it backs up, if it does back up. General Mills, and it speaks for itself. Look at this launch right here, pays a good dividend, and the relative strength is starting to accelerate. Big base in the relative strength. GrubHub, just put it in because we can imagine why GrubHub's important to the stay-at-home economy potentially, but it's not showing up in the stock yet. And a lot of these stocks are a mixed bag. So we want to be going into the industry groups and be very selective. Look at this beautiful uptrend here. This is what we are seeking, is uptrends, upward stride in the relative strength and in the price. Beautiful. Climax is at the end, and since then it's been in a 2-year downward trend. It's still in a downward trend in price and relative strength. We're going to watch it, but we're going to stay away from it. Hain Celestial, important food producer, green shoots, it's trying to complete a base in the relative strength. Also, you can see early March low. It's up near the top of this accumulation type structure, and it wants to keep going higher. It's had a nice bounce here, so this looks very constructive. So these food producers really do have important new leadership characteristics where they've been laggards for a long, long time. Here, Home Depot, beautiful uptrend, relative strength uptrend. Now we have a relative strength, somewhat of a downtrend. It's a market performer now. It's no longer leadership. The reason I put Home Depot up is because it's one of the stores, one of the chains that's open. It's considered essential. And so it's a interesting stock that should be leadership, but so far it looks like just a market performer. And we have more to go. We'll do them next week. Thank you for being here, and we'll see you next time.